Now let's start talking about the exchange rate. So basically what we're looking at is when we're trying to buy from other countries, we can't use the dollar in some countries. We actually have to use their currency in order to buy their goods. So that's where we have a foreign exchange market. So a foreign exchange market is the market in which people use one currency to buy another. So imagine you're going to the grocery store in order to buy a pair of socks or something, or you're trying to buy some milk, right? You're going to the store with your cash in hand in order to buy something. Now, you are coming in the front door, right? But then the milk is coming in the back door because that's where the supply is happening. Okay, so the suppliers come in the back, they put the milk in there, you take your money to buy the milk. So that's how the foreign exchange market is that you're coming in with your money to buy, right? You're basically changing your money for milk, right? Like it's the same thing. They're worth the same. You take the money and you get milk and you give them that, all right? So that's how the foreign exchange market is that there's somebody supplying what you're trying to buy and you're demanding it, so you're buying it. So you're exchanging what's going on here. Now imagine instead of milk, it's another currency. You take your dollars and you're buying euros. You take your dollars and you're buying pesos, right? You are literally exchanging your currency for another thing. So an exchange rate is the price of one currency expressed in terms of a unit of another currency. So the exchange rate is 1 euro could be $0.97, right? So basically that is the exchange rate, the price of one currency in terms of another. $1 is 1.47 euros. Right? The foreign exchange market is the largest market in the world economy. In 2019, about $5 trillion per day was traded. So it's pretty popular in order to basically trade these things. And we'll get into why they trade a lot, and mainly it's because people are trying to make money. So that's why it's traded every day. In 2019, U.S. real GDP was 21.4 trillion per year. So when we're looking at the foreign exchange, we're looking at all currencies, and all currencies are being traded every day. Yeah, there's a lot of money moving around every single day. So basically how it works is U.S. consumers are buying $1 trillion worth of imported goods each year. So that means U.S. businesses are selling, like if you're buying imports, you also have exports. So U.S. businesses are also selling exports. So U.S. citizens, businesses, and government invest trillions of dollars abroad each year. Now, if we were to flip it around, right, foreign investors and foreign businesses and governments also invest trillions of dollars in the U.S., and this does happen for sure. So yes, foreigners are a major buyer of U.S. federal debt. We'll get into federal debt in a later chapter, but basically what's happening here is that when the government needs extra money, they will borrow from its citizens, but they will also borrow from other countries. Okay? So basically, we have a demand and supply here for the dollar, for the euro, right? There's always a market for these currencies. For example, if we were to go to this foreign exchange calculator, which takes you to another website, you'll be able to punch in the value of your currency. So what I did was I looked at $150. If I had $150, how many euros can I buy? And so it told me I can buy 141.86 euros. Okay? So whenever you're traveling to a foreign country and you're trying to figure out how much money to bring, it's a good idea to figure out the prices in that country and figure out, okay, well, how many euros do I need to eat lunch every day? Okay, let's say it's 20 euros. You're there for 8 days. That's 8 lunches. So it's 160 euros total. So you need to figure out how many dollars you need to buy 160 euros for the lunches. So whenever you're traveling, it's a good idea to look at what is the foreign exchange, because you can't use your dollars in another country if they're not going to take it. They only take euros. So don't be stuck here not knowing what to do. Okay. So there are four groups of people or firms who participate in the foreign exchange markets. There are firms that are involved in international trade, so basically the exports and the imports. We have those people involved there. We have the tourists visiting other countries. So, if you were going to Ireland or Iceland, right, you are going there. You are having to use their currency. International investors buying ownership or part ownership of a foreign firm. So basically, if I wanted to buy into a company in a foreign country, I need to make sure I'm using the foreign currency over there. So I will have to be in the foreign exchange market in order to participate in buying that firm. And then we also have international investors making financial investments that do not involve ownership. So basically, instead of us doing business transactions in terms of like owning businesses, I can invest into different things. Like I could invest into stocks and bonds in another country. I can buy bonds from the government in a different country, right? I can do those things. So in order to do that, I'm going to need to participate in the foreign exchange market because I can't use my dollars in another country. So here's how it goes. Let's say you have $100 and you're traveling to Turkey. And what you're going to do is basically you're going to land in the airport. And then right where you get off the plane, there's probably going to be a booth that says, hey, you can exchange your currency here. All right. So this is literally the market. In a booth right here at the airport, you can exchange your currency. So they use the Turkish lira. So there's going to be one line on the board, and it could change. But basically what's happening here is that the US dollar buy 550, sell 580. Okay, so that's what it says on the board at the booth. Okay. So basically what this is trying to say is that if you had a dollar, you can buy 5.5 liras, right? So $1 buys 5.5 liras. Now you could sell for 5.8. So basically, if you had $100, this gives you 550 Turkish lira. But if you bring in 550 lira and you're trying to ask for your dollars back, they're not going to give you $100. They're going to give you 95. Because basically what's happening here is that they are a business, this foreign exchange booth, and they do want to make some money. So basically, there is a fee for exchanging currency. Okay, so basically you could buy it for 550 or you could sell it back to them for 5.8. And all of this is just a proportion. So basically it's dollars, it is dollars to liras. Another way to think about this is just the domestic currency and the foreign currency. But like I said, this is just a proportion. So the sign says US dollar buy 550. So $1 is 5.5 liras. So if I had $100 and I have to figure out, well, how many liras is that? Well, I can go here, I can do the cross, I can do the butterfly method, bat and ball. I don't care what you do. All right, but I do butterfly. Okay, so I'm going to do 1 times x, which is just x, and that'll be 100 times 5.5. So x equals 550. So basically, if I had $100, this is the same as 550 lira. So all it is a proportion. Right? So now if I were to sell it back to them, I have 550 lira. Okay, so now if I want to get my US dollars back, the exchange rate has changed. So now 1 US dollar, I can sell it back for 580 lira. So if I didn't know how many dollars I get back, but I do know I have 550 lira, I can do the butterfly method. Okay, so this would be 5.8x equals 550, 550 lira. So if I were to divide by 5.8 on both sides, then x equals 94.883. So that's how many US dollars I get back. So that's how the foreign exchange works. I bring in dollars. I'm trying to buy lira. I could bring in lira to get dollars. And so that's how the foreign exchange works. Currently, if you were to look at most of the currencies in the world, the one that's traded the most, currencies traded most on the foreign exchange market, in terms of a daily share, the US dollar is definitely traded the most. 88.3% of all the currencies in the world, every day, the dollar is traded the most. Okay? So, this is something to know whenever you're going to a foreign country and you're trying to figure out, well, how many liras do I have? How many euros do I get? How much dollars do I get back when I go back to the United States? Because if you try to buy something in the United States, you need the dollar. So yeah, you could visit another country and have all those currencies, but you need to translate it back to the dollar. And so what we're going to learn later on is, when do you try and trade it back? Okay, when would be a good time? Because look in here, right? You actually lose in this transaction. You came in with $100, right? And then you got the same lira, 550. But then you left the country with less dollars. So what we're going to look at is the exchange rate could change to where you can actually make more money than when you left. And that's where it gets really interesting. So you can travel to a different country and have the foreign exchange, and we can also have international financial investments. So financial investments that cross international boundaries and require exchanging currency. So we could have a foreign direct investment, which is purchasing a firm, at least 10% of the firm, or starting up a new firm. That's where we have a direct investment into a firm. So for example, in 2008, the Belgian beer brewing company InBev bought the U.S. beer maker Anheuser-Busch for $52 billion. So they had to exchange the euro wherever they are, and they had to put it into dollars. Okay. So they had to look at the exchange rate to figure out, well, how much can they buy? We can also have a portfolio investment in another country that is purely financial and does not involve any management responsibility. So basically, if the Belgian company is trying to buy a American beer company, they're going to have to manage them. But if we just have a portfolio investment, the only thing that's happening here is just money. Okay? There's nothing about it that's like we have to operate a business. So, for example, a U.S. financial investor can purchase United Kingdom government bonds or deposit money in a British bank. So basically, you're not trying to buy a bank and operate it. You're just trying to invest your money there. That's all you're trying to do. You're trying to earn an interest rate. And so in order to do that, you're trying to send them money, but they're not going to take your money unless you change it over to the British pound. Okay? So that's how international investments work, is that you could just directly try and buy a different firm over there, or you could just invest financially just by buying bonds or investing in a bank. The only reason you would really try and look at where to invest is just where are you earning more interest, and we'll talk about that later. So there is a market for the foreign exchange dealer. Banks or other firms that trade foreign exchange in the interbank market. So there's a roughly 2,000 firms worldwide that are foreign exchange dealers. The U.S. economy has less than 100, and these are the people that are trading every day. So 6.6 trillion traded per day in the foreign exchange market. Most transactions in the foreign exchange market are for portfolio investment, relatively. So basically, most of what's happening is these investments in the bonds. So these move around a lot because the interest rates really change a lot. So basically, interest rates higher, you invest over there, but then also the investments over here start to pick up. So you sell here, buy here, and that's what's happening every day, is where they're always trying to find a higher interest rate somewhere. So they're constantly buying and selling every day. So that's what a foreign exchange dealer is that, you know, if you're trying to buy a foreign currency or you're trying to buy an investment, you need that foreign currency, but you need to go through this person in order to do it. So, you know, there's a big business for this for sure. So in the next video, we'll talk about how to profit off of the foreign exchange market. Okay, I'll see you there.